In today's world, you see the influence of the baby boomers and what they've had on markets in the past. And as we're looking at the aging of the baby boomer, is there a specific industry that you favor more when you're looking at private equity and feeling that you can add greater value to companies?
Well, there's two generic approaches as an investor that I would take, whether it be a public market investor or a private market investor. One is what I'd call growth, and the other is what I'd call inflection. So growth would be, there's going to be a lot of folks who are 65, 85 and older, and therefore there's going to be huge demands for healthcare services. So that's just a secular growth that's driven demographically, and I need to figure out which part of that sector I want to get in front of, because it has the most growth and it has a supply-demand imbalance. It's not enough to say this is growing a lot if supply is also growing as fast or faster. So you want to get in front of things that are growing a lot and yet supply is still lagging behind, where you can have pricing power and you can have margin improvement power. So that would be on the growth side. Then there's what I call inflection investing. So it's not the slope of the curve, it's the second derivative, it's the rate of change. It's the slope is now inflecting up. So being in front of something that's about to change, and that usually means an industry that's being disrupted in transition. Happens to be that something like healthcare has both characteristics. It's growing and it's changing. It's changing because of things like the Affordable Care Act, it's changing because of technology, it's changing because of the internet, it's changing because of science. So when you put something like that growth and that dynamic change together, if you're a real expert, you can find the interesting places, because there's a lot of winners, there's also a lot of losers in those segments, and you need to figure out how to separate those out. But we're fairly agnostic about industry per se. Things kind of move in 3 or 4 year cycles. So we're always sort of asking ourselves, what are the themes of the next 3 or 4 years? And at some point, the theme will be, energy prices are really low now, so it's time to get in. And when oil gets to 100, the theme might be energy prices are really high now, and it's time to get out. So we have to play those themes, and those themes are moving dynamically within the developed markets, but also around the world as economies and as countries are changing all around the world.